Welcome back to Market Headlines. Global economic recession threat on Indonesia is arguably inevitable. Various scenarios that are less encouraging about economic growth in the second quarter of 2020 make the recession signal even stronger.
Global economic recession threat on Indonesia's economy is arguably inevitable. Various scenarios that are less encouraging about economic growth in the second quarter of 2020 make the recession signal even stronger. Moreover, several countries have been confirmed to have experienced a recession, including Germany and the United States, which recorded GDP dropped quite deeply, while Germany minus 2.3% in the second quarter, whereas the United States minus 32.9%. Meanwhile, the Indonesian government, together with Bank of Indonesia, continues to make efforts to accelerate Indonesia's economic recovery, which is estimated to have a negative growth in the second quarter. This effort is of course also carried out to prevent Indonesia from entering economic recession. Related to this, economist Fitra Faisal emphasized that Indonesia should first mitigate the handling of COVID-19 because he believes that the economy will gradually recover if COVID-19 can be handled properly. From all sources, IDX Channel.
Economic recession's wave has hit a number of countries, including large countries such as United States and European Union. How is the impact on Indonesia? That's the real question. So before we talk further about it, let me remind you what is actually the recession is about. Here it is. Through the graphic, we can see the definitions of recessions itself. First of all, when an economy experiences a decrease in its gross domestic product for 2 consecutive quarters. And then it leads to some indicators. First of all, the GDP rate contractions of a country. And the second of all, the rising number of unemployments. And the third one is that falling retail sales. And not to mention about the slowed manufacturing growth that existed in one country. And the last one is that the last indicator would be the decline in the real personal income. In a recession, we may feel these compounding effects in a few different ways. Jobless claim go up, spending habits changes, sales slow down, and economic opportunity dwindle. Meanwhile, the causes of recessions are economic shocks, loss of consumer confidence, and high interest rate, and also deflations. But somehow, in fact, recessions are considered to be a normal part of the economic or business cycle, where business cycle consists of expansion, peak, and contraction through. So, which countries that have been confirmed to have experienced a recession? So let's move on to the next graphic to have a clearer view about that. Here it is. We can see some countries that have stated that they are in the conditions of the recessions. First of all, United States. In the first quarter of 2020, the economic is in the number of minus 5%, but however, in the second quarter of 2020, the number went down to be minus 32.9%. And moving on to the Asia ones, we got Singapore. In the first quarter of 2020, the economic is minus 0.3%, but however, in the second quarter of 2020, it went worse to be minus 12.6% of the GDP. And moving on to Hong Kong as well, still from the Asia, in the first quarter of 2020, the economic is a minus 9.1% of the GDP. But however, in the second quarter of 2020, it is minus 9%. And moving on to South Korea, which is the latest data we gather, in the first quarter of 2020, the number is in the level of 1.4%. But however, it went worse in the second quarter of 2020 to be minus 2.9%. And also from European Union, Germany, in the first quarter of 2020, the economy went down 2.3%, and the second quarter of 2020, the number went down to be minus 11.7%. And not only the United States, even the European Union has also been confirmed to experience a recession. A strict lockdown to prevent the spread of coronavirus weighed heavily on the Europe's economy in the second quarter, causing a record of contractions more severe than experienced by the U.S. In the Eurozone's gross domestic product fell 40.3% on the annual basis, far exceeding the 32.9% contractions in the U.S. economy over the same period, while the Eurozone's unemployment rate edged up to 7.8% in June. And meantime, in the United States, 11.1% of workers were unemployed in June. It is up sharply from 3.5% earlier this year. So what are the effects of the global recessions that threaten Indonesia? So let's check it in the next graphic. So here it is, the estimated impact of global recessions on Indonesia. First of all, we can take a look in the Washington recessions. So Indonesia's export US may decline. And when we talk about financial markets, appetite is also would likely to be go down as well. And the second one is that Singapore recessions, as Singapore is our neighbor and the Asian country. First of all, we can see foreign direct investment from Singapore to Indonesia would likely to go down. And also it will affect also in the export and import activity between two countries. And moving on to Hong Kong recessions, as we have a close relations with the country, the foreign direct investment from Hong Kong to Indonesia would likely to go down as well, and the welfare of Indonesian workers in Hong Kong would likely to be depressed as well. One of the effects of United States recessions on Indonesia can be seen on the potential decline in export and import activities, whereas the total trade between Indonesia and US from January to May 2020 recorded at $10.75 billion US dollar, with a surplus for Indonesia at $3.7 billion US dollar. And meanwhile, another impact that must also be anticipated is the decline in foreign direct investment, especially from Singapore and also Hong Kong, two countries with the largest value of foreign direct investment to Indonesia. Singapore's investment portions in the second quarter hit 28.8%, while Hong Kong portion reached 13% of the total investment in the first semester of 2020. How is the conditions of Indonesia's economy so far? So let's take a look at the data. And the data on Indonesia's economic growth in the next slide. Here it is. Through the next graphic, we can see Indonesia's GDP growth rate. As we compile it from the first quarter of 2019, the data showed up that 5.07%. Meanwhile, in the second quarter of 2019, the number went down a bit to be 5.05%. It remains stagnations in the third quarter of 2019. Meanwhile, in the fourth quarter of 2019, Indonesia's GDP growth rate was in a 4.97%. But however, in 2020, the first quarter, Indonesia's GDP growth rate was at the number of 2.97%. And meanwhile, the second quarter estimations by the Finance Ministry will hit minus 4.3%. Finance Minister Sri Mulyani revised the projected of national economic growth rate to be minus 4.3% in the second quarter of 2020. This figure is deeper than the initial projections of minus 3.8%. And the sharper decline in national economy is due to a number of industrial sectors whose performance has contracted considerably, from trade, mining, manufacturing to transportations. Even so, Sri Mulyani hopes that economic recovery will start in the third and fourth quarter. So, what are the steps taken by the government to anticipate or even avoid a recession? The information is in the next graphic. Here it is. We just compile strategy to avoid national economic recessions. First of all, government have various methods in here. First of all, massive government spending. And second of all, is loan restructuring incentive. The third one is that working capital loan guarantee. And also government gives subsidy for industry and businesses, and not to mention about social assistance distributions that government provided for the society. And these methods have aimed to several goals, which is leverage domestic demand and consumptions, and the second one is that trigger or more business sector investment, and the third one is that to aim, and the third aim is that to avoid layoff wave, and the fourth one is that turning the wheels of the economy for sure. Economic observers are still quite optimistic that Indonesia's economic growth is still better than any other countries that have experienced recessions. So to avoid or to at least minimize the risk to enter the recession zone, one thing that needs to be encouraged is the domestic consumptions. It is of course in line with Indonesia's GDP structure, which is largely supported by the household consumptions, which contributed 58% to the GDP in the first quarter of 2020. In the midst of many challenges and current situations, let's support and even criticize the government to do the best efforts to maintain the stability of the domestic economy. And stay tuned to market headlines because we will be right back after this quick break.